Hi, I'm David Grasser from Gen FKD here for another edition of Bookstr Business with my highly esteemed guest here. We actually know each other. Jeffrey Weiss, how you doing?
I am okay, my friend, and I just want to say you're interviewing me for a second time. You're very brave. Many have tried and failed. And I can't guarantee the long-term consequences from interviewing me a second time that you're going to have to undergo, but
well, anyway,
thank you.
Here we go, Jeff. So as you guys see in this giant book behind us, it's called Relationship Investing. You wrote that.
I did. The culmination of many years of a dream to get this book out to try to help the public at large, hopefully improve their investment performance.
So why do you see money like any other relationship? Like you're trying to get a girlfriend or a boyfriend or keeping a relationship with your mother or your neighbor. Why is it similar?
That's the essence of the book, David. Just like in a relationship, if things seem to be deteriorating to the point that two people are growing apart, their relationship is frayed, they just don't have that same zest and that same desire to be together and look forward to seeing one another, you would back away. That's how one should approach the stock market. In my opinion, reducing a position is the stock acts poorer and the relationship with the stock gets worse, and not becoming more involved with the stock by buying an increasing amount of shares of that company as the stock is going down. Unfortunately, people do not treat their investments like they would their relationships. And that's why I felt there was a significant need to put the rules of investing into something everyone could understand. Human relationships having to do with love, dating, marriage, divorce, parenting, business, and the like.
So let me get this straight. So like an investment, just like a friend, if they treat me like crap, I probably shouldn't give them any more attention.
Yeah, why would you put an increasing amount of your time into something that is going to be...
You got to cut and run.
Right, but remember, in the stock market, cutting and running, taking a loss, in other words, is very hard for a person to deal with emotionally, because once you sell that stock for a loss, you're admitting you were wrong. It's over. But in the stock market, you must do that because you can be right 8 or 9 out of 10 times and still lose a significant amount of money if you don't know what to do those 1 or 2 times that you're wrong. So it's not a question of your batting average. It's about how to let profits run and cut your losses. Just like in a relationship, things are good. You obviously want to go out more and more and more and more. You never say, things are wonderful, let's break up. But in the stock market, people are often quick to take their profits, keep their losses, and that's one of, unfortunately, the investment sins they make.
So they're doing everything backwards.
In my opinion, yes. And I started in this business with a spark in the 6th grade for a math project. That will be now 50 years, a half century, this April, next month.
So, one of the hardest things in life, whether it involves money or relationships, is admitting that you're wrong and writing off what you've put into something. Because, even in friendship or with love or with investment, we give our all. And it's hard to say, crap, I did the wrong thing, I got to cut my losses and run. It hurts.
It does. But I would say to those of you who are dealing with that now with your investments, if you're in a relationship and you may be a little hesitant to get out, just like you're in a stock and you're hesitant to sell it, by owning that stock or by staying in that relationship that's not what you know it should be, you're foregoing any opportunity to move on to get something better. And that losing stock may start to command so much of your attention, an inordinate amount of your attention, David, that it starts to detract from the rest of your portfolio that you should be concentrating on. And that's why I often will tell people that the only guarantees in this business are hard work and losses. But if you can't stop small cuts from becoming hemorrhages in the stock market, unfortunately, you're doomed to failure. If I went to my doctor and he said, Jeff, look, you have a cut. Right? I have a Band-Aid here, a little cut, right? You know what? take the Band-Aid off, wait till it gets worse, let it get infected, and then let me have to cut a chunk out. Or, better yet, let's wait till it hemorrhages. I mean, what kind of doctor is that? But again, in the stock market, very often, not only are losses held, but unfortunately, even more money is added to those losing stocks as the stock goes down in price, otherwise known
because people think it's getting cheaper, so it's the right time to buy.
Right. If it was great at 80, it has to be better at 70. It's a steal
Because
at
they were
60 and at
sold-
50, my gosh.
Because they were sold on 80, never mind the 50 now.
Right. But again, the stock market's not like, I call it the Macy syndrome. When you buy something in a department store, you've bought it, it's on sale, you use it, you're done. In the stock market, just because something looks cheap doesn't mean it can't get far cheaper and continue to fall long after you've made your original purchase.
You know, but this is the number one relationship advice I personally give people.
Okay, let's hear
is
it.
that people don't understand trade-offs. Exactly what you're talking about. You know, you don't even know what you're giving up when you don't pull out of something that is not working out. You only have so much energy, so much time, so much money. So if something's not going well, if you don't cut your losses, you don't even have a clue of what is possibly on the other side.
That's true. When I sell stock for a loss, I allow myself this. I'm allowed to look at that stock for the rest of the day. Then it comes off the screen. And you have to...
Out of sight, out of mind, you can't...
You have to. Now,
Okay.
at some future time, maybe it'll start to act better, and I may well have to pay a higher price. Now, some folks say, why should I buy it at a higher price than I sold it at? Because that's the price I pay to watch how the stock is performing on the charts. Now, I'm a technical analyst. I don't look at fundamentals. I don't look at earnings. I don't look at dividends. I don't look at any reams of financial data or economic gross domestic product or anything like that. I'm only interested in the price movement of the stock. So it's like if I want to
Really? So you don't look at any of the underlying...
None. It's called technical analysis. I'll tell you why. You look perplexed. And I'll tell you...
Well, it just seems like a company might... Then you would have invested in Enron then right before it went broke.
Well, not
'Cause
necessarily.
You're not opening up the kimono and looking at the rest of the company.
Right, but if you looked, for instance, you looked at Enron, we know what happened to Enron, but very often you'll see the stock break down and head south well ahead of the reasons to account for it because the market is a discounting mechanism and looks ahead. For instance, when I asked Carrie to go out, I was dating my wife. I didn't say, oh, could I speak to your brothers or your sisters or your aunts and your uncles? No. I wanted to go out with her. In the stock market, it's the same thing. I don't need the middleman. I don't need the economic data. I don't need the management prognostications. I don't need to know what Wall Street's analysts are saying because to the technical analyst, it's the movement of the stock market that's the greatest
And
analyst.
there's certain movements that are associated with better performance. and
Certain
worse
patterns that repeat forever. While we're sitting here 50 years from now, 100 years from now, because human emotions don't change. So just like if I want to, or those of you who want to go out with someone, you go out with that person. If I want to see what a stock's going to do, hey, I go right to the source of my interest, the stock, not the company, not the economy. Always realizing that if we're in a primary downtrend, chances are no matter what I buy, I'm going to lose money on. So like Charles Dow said, the short term of Dow Jones Industrial Average fame, the short term trend are the ripples, medium term trend are the waves, the long term trend is the tide. No matter how good a swimmer you are, David, you cannot swim against the tide.
Okay, so Matthew says, are there any major changes on Wall Street
Oh,
since you started?
I thought you were quoting me the Bible.
No. No, we're not talking about the Epistle of Matthew. No religion or politics on this show. Are there any major changes on Wall Street since you started that have made your job more easy or more difficult?
Are there any change? Repeat that. I want to get this right.
So
for
any
Matthew.
changes on Wall Street that have either made your job easier or more difficult?
Okay. Matthew, jobs throughout your career are never going to get easier. I'm going to say they're going to get harder, but they'll always become more challenging because hopefully people always want to do more, take on more responsibility, be the best they can be. One thing has made it more challenging, I'll say, Matthew, and that is that the market volatility, I call this the accordion effect, has compressed moves that used to take many months into many weeks, and moves that used to take many weeks into many days, and moves that used to take many days into many less
Man,
days.
you step out and get a latte, and holy bejesus, what happened?
Things can happen very.
Yeah.
So it's that type of time frame. So how do we combat that, or how do we attempt to deal with it? What I'll often do is suggest the employment of phase investing. Maybe sell part of your position, and as the stock worsens, sell more, and then sell more, and sell more. Just like you would back away from a relationship as it increasingly shows signs of wear and tear. Because when you see this volatility, there's always the chance you will get whipsawed and the market will revert to its former trend. So
Like
I'm a
an
believer,
accordion.
right? So I'm not usually playing an all or nothing game. However, when I'm selling, I strongly and usually suggest selling at the market because it's your money. And when I want my money back, I'm not going to quibble for 5 or 10 or 20 cents. I'll let my stock run on the upside. I don't want to put a lid on how high it'll go, just like I don't want to put a lid on how good my relationship will get. Luckily, I'm practically married to perfection, my wife, so, it just gets better and better. I won't comment on my end. But I don't want to put a lid on how high something could go. I want to have a floor on how low it can go. That, to me, is one of the 10 cardinal investment rules of investing.
Jeff, we were teaching us about love and money, but this is a website about books, and we have a lot of questions
I think I know more about money.
So were you inspired by any other books, either writing relationship investing or while working as a technical analyst?
Thank you. Who asked that question?
This was Derek.
I'd like to give credit. Thank you, Derek. I was inspired, as I go back and think about it now, in the 1973-1974 bear market, where before my eyes I saw a gentleman named Bill watch and sit and endure the market going down, the Dow Jones Industrial Average, from 1,050 down below 600, which it reached in late 1974, bottoming in December of that year, I believe. And watching what it did to him, and eventually, I believe, just from watching him deteriorate, play a role in shortening his life. And I just watched how he endured that, and I just realized then and there the value of managing risk, admitting your error, selling on the way down, because you don't always get a chance to sell on the way up in a bear market. And that really stuck with me, because I also was living through 73, 74 with my birthday / bar mitzvah money when I was 13. And the best way to, and I say this in the book, if you want to hold it up.
It's behind us, Jeff.
Relationship investing. Oh, it isn't? No, I didn't see that. Stock market therapy for your money. The best way to learn big lessons is with small amounts of money.
No books inspired you?
I didn't read a lot, because remember, I was
Not
looking
even the
at
Torah,
charts.
no books?
Well, what I try to do is help people do better in the market, because I believe the more people I can help and the more money they'll save and the more money they'll make, the more money that's available to give to help other people make. And that, to me, is the circle of life and what makes the world go round.
Okay, so Jeff, people are asking about your wife, Miss Carrie. Do you guys have a stock that you both love in common?
I would just say, from my standpoint, it's the heart. I mean, without giving out an individual recommendation.
No, but you both don't like, Bank of America. Both fell in love with it.
My wife's kind of an acclaimed culinary person. I'm trying to pick the words.
She's
so
more
that
picking out
she's
what's
not watching
for dinner.
now saying, don't say that. She's a plant-based chef. She's had an astounding life, and hopefully you'll be interviewing her with a far more interesting story than I. But I will say this. When you are suffering in the stock market, I would say this is the single most important aspect of our talk today on Bookstr Live. losses in the stock market can affect your personal relationship. It could affect your marriage. It could affect how you act when your kids come up to you and say, Mom or Dad, I want to do this or that. It just affects you. Money affects you. You never want to say that, oh my gosh, I wish we could have taken that vacation. I wish we could have afforded that house. I wish you could have gone, to the academic institution of your choice. We just have to make a few little adjustments. So I always say to people, sell down to the sleeping point if you're nervous about the market. You don't necessarily have to take risks that, if you're wrong, could jeopardize your life, which means maybe you won't make as much on the upside, but you will sleep better at night. Because remember, we've had a few flash crashes. We've had violent bear markets. Things that used to happen once in decades now seem to be happening once a year. So because of that,
January was scary this year.
That's right. So, like, to go to Matt's question, anything that has changed or what I've learned, and of course in the fourth quarter we saw that too with the market. Maybe you take only part of a position, or maybe you just keep enough money on the side so that if worse comes to worse, always look at a worst case basis and say what can happen. I mean, I have 8 HEPA air filters in my home, high efficiency particulate air. We only drive Volvos because I personally believe the car is the greatest investment one can make, contrary to those who say when you drive a car off the lot, it depreciates by 15 to 20%. To me, it could save my life. What better investment is that? So I look at everything in terms of risk management.
Risk management. I'd like to look at my relationship like that. Okay, so let's talk about a stock right now that's having a difficult relationship, okay? The 737 MAX has just been grounded. Of course, that was the airliner that was involved in the crash in Ethiopia. There was a crash in Indonesia earlier this year. So Matthew is back with another question. He's saying, what do you think about Boeing stock?
I will say this because I purposely didn't look at it before I got on because I sometimes figure I'm going to get a question. But what I would say is this is hard to say in terms of how Matt's
So there's like
asking the question.
350 aircraft grounded. They have $650 million in orders.
And that would be fundamental news.
Right.
What often, this has nothing to do with Boeing per se, but when something is in the news so much, I tend to look at things that are smaller, companies that are kind of out of the eye a little bit. So I'm not trying to evade your question, but what I could do at some point is I could look at the Boeing, the BA chart, which is part of the Dow Jones Industrial Average.
You're saying when they're saying look here, look here, look here, you're looking at other stuff.
I'm looking at
that's a technical
personally.
Analyst,
I'm like, I'm devastated. I mean, my family, flies the MAX 8, but has been on it. But in terms of investing, something could affect us very emotionally as a news event. But in terms of the stock market, there was the Korean airline tragedy event back in the 80s, and people grieved. And for some reason, the Dow Jones Industrial Average saw fit to keep on going up for months and months and months and months.
So as a technical analyst, you were telling me that you only focus on price, but you're also a regular person. Like you read the news.
Which is the emotion. Oh yeah, I read the journal cover to cover, cover to cover. But it's separate from what I do in the market. So double tops, double bottoms, saucers.
So just theoretically, we're not asking for stock advice here, but just theoretically, if you saw Boeing was fit despite the what's going on right now in the news, you would still go for it.
I wouldn't, because the chart would have to show it. There's many companies that do well where I might not like the chart at all, and I'm a seller. And there's many products people use where they say to me, Jeff, I love this product, I'm going to buy the stock. And I say to them, what do the two have to do with one another if the stock is in a downtrend? Look, there's many stocks that are down 30, 40, 50% from where they were. And you could take a look and go on the internet and see which ones they were.
General Electric is a big one.
General Electric was a $60 name. I'm just going back and telling you where it was. It doesn't mean something isn't a great company. Doesn't mean their employees aren't the cream of the crop. It just means that the stock and the company often don't need to move in a similar way.
But what do you have to say for people who say, oh, General Electric's going through a moment. They might come back.
And I say if they are coming back, and here's my question.
Okay.
What is cheap?
that's all relative. It's like beauty. It's in the eye of the beholder.
What is cheap? And that's why zillions of people with billions of dollars making that decision on multiple names every second of every day, and it means different things to different people. But looking at the chart, when you're looking at the news, different people have different opinions. If I were to hit up I'm getting the
You think so, Jeff? I haven't noticed. Fox News and MSNBC are like two different worldviews.
All right, but and it's like you know what? The only signal I don't like is this. But when someone does this now, I say, "Oh, more time, good." In terms of things being different, let's look at this. I can hit up a stock on my Bloomberg machine out there, and I will see buys, sells, and holds from the best analysts on Wall Street on the same exact stock. On the same exact stock.
They all copy each other?
Yeah. Well, no, or they're diametrically opposed. Matter of fact, and I won't tell you what stock it is, one single day I saw one firm have a buy and one firm have the opposite recommendation the same day on the very same company. That's why I look at the chart, because one thing that's not in dispute is where the price of the stock is trading at. So while there's a lot of opinions by a lot of analysts, there's only one analyst that matters. That's the stock market. The stock market sets the price of the stock. It's the price of the stock that over time forms a chart, either on a daily closing basis or on a high-low basis, which is known as a bar chart, the high and the low, or a line chart where a stock closes here one day, here the next day, here the next day, and you string together daily closes or weekly closes as opposed to highs and lows, which are bars. That's what I look at. The purest form of analysis, to me, is technical analysis, not fundamental analysis.
Okay, so last question, Jeff.
Was I vociferous on that?
No,
I am so passionate on that.
No, it was great. I have a question. Can this technical analysis be applied to macroeconomics, like predicting the next recession and whatnot?
I haven't used it like that, but if someone were to show me charts of fundamental data and I could draw lines and see when certain things break, if there's a lead time or something like that, I'd be open to that.
The stock price of our country, if we look at it, it's a very crude measure, right? But somewhere around $19, $20 trillion, our GDP tells you the general health of the overall economy and whether we're growing or we're shrinking. Could you trace that data and figure out whether is a recession coming, is more growth coming, et cetera?
I understand what you're saying. I haven't had to do that. I mean, if someone wants to show it to me or say, Jeff, would you work on these charts? I'd be willing to do it. It's just that the work I've been doing, and I do it by hand, by the way, much like John Marin used to choreograph a play with his X's and his O's, on your TV. I still do things by hand because I feel it brings me closer to
You're
things.
a die and breathe. I don't do anything by hand.
And then I, of course, can chart and put up the charts on my Bloomberg, whatever charting service people use. But to me, technical analysis says what has been known by the investing public and by the world at large for decades, if not centuries. A picture is worth 1,000 words. And that is the basis on which I decided in 1973, 1974, during the bear market, 46 years ago, to devote my career and my analytical life to technical analysis.
Okay, well, on that note, Jeff Weiss, author of Investment Relationship Investing.
Stock market therapy for your money.
He's got the pitch down. Join us pretty soon for another episode of Bookstr Business. We'll catch you later.